Usually when I'm introduced as a former chair of the supervisory board of the Central Bank of Iceland, I always have to add, I was after the crisis. So I was there in the cleanup, and I guess why I was selected as a, shall we say, a non-conventional economist to the supervisory board is because I was discussing the monetary policy from the year 2001, and I was warning that the policy that was conducted was actually destabilizing, and I was trying to explain why. But anyway, I think it's very interesting that an Icelander is here in Sweden to discuss an alternative to central bank digital currency. Because it was actually a Swede. This guy here, Garðar Svavarsson, he was the first guy to circumnavigate Iceland. And when he did that in 1860, he found out a really amazing and important fact. He found out that Iceland was an island. And but the interesting thing about this exploration is that he realized that Iceland was an island, not because it was not a research project and anything like that. It was actually because he sailed into a storm, and that accidentally pushed his ship to this island in the middle of the Atlantic, and that's how we found out. So I just hope that, central bank digital currency is, in my sense, kind of an island in the sea of new emerging technological alternatives, and not the least new business models for payments, stablecoins and cryptocurrencies. So let's hope that central bankers will not be caught off guard and blown away by a storm, and then a financial storm, only to discover that central bank digital currency is a deserted and isolated island. Having listened to Michael Kumhoff earlier this morning, I'm not worried about central bankers like him, but I'm more worried that societies will be basically taken by surprise. So it's not enough to understand this. Policymakers have to do it, and they have to act accordingly. But anyway, after being a chair at the Icelandic Central Bank, I've co-founded a fintech company, Monerium. And the company's aim is to issue and redeem any fiat currency on blockchain. And that includes the Swedish krona, the British pound, whatever. That is the aim. So with that, every fiat currency on such a blockchain is programmable, and it's issued at par and redeemed at par. It is fully backed. It's 100% reserve-based system. It's compliant, it's regulated, and it's audited. And I'm pleased to state that yesterday we actually got financial license. It was announced yesterday. Iceland is a part of the European Economic Area with the European Union plus Norway and Liechtenstein and Iceland. And so we got our license yesterday, meaning that we will issue initially the Icelandic krona on the Ethereum blockchain. You can call it the E-krona. So you have been talking here earlier about the importance of having central bankers and politicians to understand this. But this can't actually be done just right away. And it's very close to central bank money, as I will explain. So initially, when we looked at various legal structures for our project around the world, we didn't only look at Europe. I have been living in the US. Some of the team members are from Asia. So we can basically place our company all over the world. But we actually didn't need to search high and low for a framework for a close proxy of a central bank money. It is in fact readily available here in the EU as a directive number 110 from 2009. So the first e-money directive in Europe was adopted on September 18th, year 2000, and the aim was to provide the regulatory framework in delivering the full potential benefits of electronic money and one that avoids hampering technological innovation. And furthermore, the European Directive from 2009 explicitly states that it's introducing a legal framework that is supposed to be technologically neutral. And that's a good thing in my opinion. So unlike bank deposits, an electronic money institution, which we became yesterday as EMI, must safeguard clients' funds separately from any other financial activities, such as lending. So instead, customers' funds are invested in a segregated portfolio of high-quality liquid instruments along with regulatory minimum reserves. So the structure is similar to a high-grade money market fund with a minimum capital contribution to the fund administrator that serves as a buffer against losses. So isn't that the very feature of a narrow bank, in a sense? E-money can be used on a peer-to-peer lending platform where funds are transferred from pre-existing e-money owners to borrowers, meaning there is no new money created in that activity. So not only does an electronic money institution, EMI, have to safeguard its customers' funds separately, but also as a part of the legislation, client funds have the highest priority of claims against the bankruptcy estate. That's Act number 21 from 1991 in the Icelandic case. It's different in other jurisdictions. So, and if we add to that there is actually nothing stopping central banks from allowing EMIs to safeguard the client's funds as deposits at the central bank. There is nothing stopping the central banks to do this, except they have to decide it, and it has to be, in the Icelandic case, it is not specifically stated, but it's not banned, and it's a decision by the bank. So, and actually this is a practice in some of the European countries, and I can name Lithuania, Latvia, and I believe the UK as well, that an e-money institution can deposit funds at the central bank. So if the underlying e-money safeguarded funds are stored at the central bank, then we have no counterparty risk for the safeguarded client fund. And isn't that the very core of central bank digital currency? Isn't that what is people are trying to achieve with safe haven and save money? So e-money in the hands of the general public thus provides a near risk-free alternative to bank deposits, and a shift away from bank deposits to e-money reduces the need of government guarantees on bank deposits, eliminating a source of moral hazard within the financial system. I don't need to say this in this crowd, but the more popular e-money becomes, it can significantly reduce the concentration of liquidity, deposits, and credit risk. This, in turn, reduces the systemic importance of large banks. So these features are already in place under the European directive that I mentioned, and they resonate quite well with some of the arguments offered that are supposed to be offered with a central bank digital currency. But yes, this is a central bank money proxy, but it's actually a pretty good one, and actually includes other important elements of consumer protection. And in my mind, and many others, it may actually be better than the real thing, since the innovation part is outsourced. So EMIs can focus on innovation, interface design, and client management, but central banks, on their role in underpinning trust, a global legal standard, and enhance cross-border functionality. Yeah, well, Garðar is still here, so I'm going to move to this one here. So central bank digital currency, they have definitely some unquestionable merits and can lead to a better and safer monetary system. In my mind, that's without a doubt. But what I'm arguing is that we should aim for a digital currency with the characteristics of central bank digital currency, one that is supported by central banks, a proxy central bank money, if you will, but where we trust the private sector to lead technological innovation and business development. So the other alternative, where central banks would issue directly to the general public, is problematic in my mind. For example, what does it actually involve technically and business-wise? Does it mean that a central bank has to determine what technical platform to use? Should this E-krona be blockchain-based? And if so, what blockchain should we use? JP Morgan recently announced partnership with Microsoft Azure to make Quorum, which is a version of Ethereum. Should it be based on the ERC token standard? Should it be based on a public blockchain and permissionless proof of work? Should we look at the OmniLayer, Corda from R3, or Hyperledger developed under the umbrella of the Linux Foundation? So, and should it support social media platforms, messaging app? What about competing business models and trends? What business logic should be supported by the technical platform chosen by a central bank? In my mind, this is a scary question if a central bank is going to decide that. Is a central bank going to favor one business alternative over another by supporting certain functionality and therefore exclude others? And today is hardly the end of innovation. What about future technological and business innovation? What about the forthcoming quantum computing and how that potentially affects public-private key cryptography technology? I really don't think that this should be the role of a central bank. So, central banks, they face some competition, and this is a picture showing stablecoin projects that was listed like 6 months ago. They were about 80 or something like that. The total number of cryptocurrencies in the world are probably around 2,000 or something like that. But the market value of cryptocurrencies listed is about, I was checking just 10 minutes ago, is about $272 billion US dollars. 272. It's a little bit more than half of the market value of Facebook. It's nothing. That is not a problem. But what this has shown is there is a tremendous interest, and the technology is very, very interesting, and we can do a lot with this technology. So, you may ask if these alternatives are becoming more and more widespread and popular. How then are central banks going to compete with frictionless cross-border payments, cryptocurrencies, stablecoins, and the supposedly upcoming, for example, the global coin, that is what Facebook is now planning, and they will announce that next week. In my view, the answer is pretty simple. Central bank money has to be widely supported by technological and business innovation at all times, but not least from the private sector. And this is, in my view, best done by outsourcing the implementation, business and technological innovation. Central banks should focus on standardization, trust building, and facilitate frictionless cross-border payments. I'm not going to go into details about the ideas how that can be done, but that is something that, in my mind, the central bank should be focusing on. And that means that the central bank should lead the global legal standards, unite behind the technological neutral legal standard, but leave technological and business innovation, interface design, and client management to the private sector. And in my mind as well, then the European EMI directive, first introduced 20 years ago, is a solid digital currency standard to build on for the future of money globally. And I think that is something to aim for. Thank you. And this is how we promote our solution. Anyway, it's safe, smart, and self-sovereign.